Number 5, and this is I think very important, when you invest for the long term, you have the time to weather volatility. By investing for the long term, investors have the advantage of time to weather market volatility and short-term market fluctuations. How the market moves over the next minute, over the next 8 seconds, over the next 8 days won't actually matter. Before we continue with the video, I'd like to invite everyone to Investment Conference 2023. This is an event that we co-founded about 10 years ago with the goal to educate people about investing and different investments that are out there. We have a lot of speakers from Randall Chongson, Rex Mendoza, David Lichu, Alvin Ang. But what's interesting for this year also, since I've been pushing and I've been a very big advocate of Web3 cryptocurrencies and NFTs, we're adding crypto into the mix. If you want to venture into crypto and NFTs, check out the link down below. It's happening May 27, 2023 at Samsung Hall. We're gonna have 1,000 people, 1,000 investors joining us. So I hope to see you there. Hey guys, so in this video, I wanna talk about 5 reasons why long-term investing work. And I wanna make it super balanced also by making 5 reasons why long-term investing does not work. Because there will be people who will be more inclined to invest for the long term, but there will also be people who just want to invest for the short term, or they've seen the negative sides of it. And that's what's amazing about it. It's not a one-size-fits-all investment, and there will be occasions, there will be narratives where investing for the long term will fit certain people, and there will be narratives also where investing for the short term or not investing for the long term won't really work for a certain set of people. But if there's one thing that I do know is what's very important here, and the key theme and narrative is that you invest. I think that's more important, because even though you're long-term or you're not long-term, the fact that you're letting your money work hard for you, I think that's what matters the most. There might be different approaches for others doing it long-term and others not doing it long-term. What matters the most is that you're building assets, you're letting your money work hard for you. And I think that's what will set you apart versus everyone else. Now, let's get started. So, 5 reasons why long-term investing works. Basically, compound interest. Over time, the returns from your investments compound, meaning the growth builds on itself, leading to potential higher returns. And what's amazing about compound interest is that at a certain point, what you're earning is the product of the earnings of the earnings of the earnings of the earnings that you didn't even put in the first place. And that's what makes it very powerful. That's what literally makes it money working hard for you. And that's what people don't actually see it. Because when you spend money right now on stuff that don't matter, the potential for that to make money for you stops right there, right off the bat. But when you invest and you let your money work hard and you just pile it back in, then it becomes super powerful. People always invest because they want to buy stuff, which is okay also. However, why not invest so that as that earns, you get to pile it on and pile it on and pile it on and pile it on and build a base. I keep saying this, that the name of the game is volume. If you keep on removing your earnings, you'll eventually miss out on a lot of opportunities. Why not let it compound and make it work hard for you? That even if there's an economic downturn later on, it doesn't matter, because you can take that risk, because what you're putting in and the larger exposure is not anymore purely capital from your own hard work, but capital that is basically a byproduct already of what you invested. So that's number 1. Number 2 is this. Long-term investing works because you get to dollar cost average. You get to stagger in money. It's very understandable that a lot of people are employed. A lot of people have jobs. A lot of people don't have money that they could lump sum into an investment. Long-term investing works because it allows you to build that base steadily, and it allows you to put it in on a regular basis, and it allows you to steadily accumulate and buy crypto or stocks or bonds or ETFs or REITs that you actually believe in. You can build that base and you can make that bigger over time from your salary, from whatever comes in on a regular basis for you. when you look at it from a long-term perspective, then that's what makes it very, very, very amazing already. Because what if you start accumulating stock from the salary that you've had and do it for 10 years? Your salary on your first year versus your salary from your 10th year will be different. You probably are earning more on your 10th year than on your first year. And by the time you looked at it, wow, you've earned or invested a larger amount of money already. So that's what I'm saying to all of you. Looking at it from a long-term perspective allows you to dollar cost and build a very large base. Number 3 is this: market corrections. There will be short-term market corrections, which is part of the game. Corrections and downturns are normal and can offer long-term investors the opportunity to buy stocks and crypto at a lower price. And if your time horizon is long, it allows you to take advantage of dips, it allows you to take advantage of large drops and even crashes. Because think about it, if you're 20 or you're 30 or you're 40 and you want to invest until 60, then you have more than 2 decades to be able to watch that investment recover should there have been a crash at the time you invested. And that can only work if your time horizon is very, 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 very long, that you won't be scared of what will happen next because it's cyclical. Or even if you invest and it drops for a year or 2 more, it doesn't really matter because your time horizon is long. Or if you invest, it drops and it doesn't move for the next 4 years, but it 10x's in the next decade or so, then that investment would have been well worth it. Number 4, diversification. When your time horizon is long, you could diversify. And when you diversify, it could reduce risk, and it allows you also to put it in assets that are not heavily correlated. And if you look at it also, when I started out, I just started out pretty much in the stock market. But as I got older, I pretty much diversified also in other investment classes. That would not have been the case if I was just in investing for the short term. When you invest for the long term, you get a grander view and you allow yourself to become a multi-asset investor as well. Number 5, and this is I think very important, when you invest for the long term, you have the time to weather volatility. By investing for the long term, investors have the advantage of time to weather market volatility and short-term market fluctuations. How the market moves over the next minute, over the next 8 seconds, over the next 8 days won't actually matter. And what matters over the long term now will be investing in asset classes that are really good, that are superior, and building life-changing volume in all of them. To summarize why long-term investing works, because it allows compound interest to work hard for you, it allows you to dollar cost average, it protects you from market corrections, it allows you to diversify, and it allows you to weather volatility. To make this video very, very balanced, here are 5 reasons also why long-term investing may not work. Number 1 is this: economic downturns can result into a decrease in company profits, stock prices, and potentially leading to lower returns. What do I mean by that? What if an economic crisis happened and that crisis heavily affected the stock that were long-term on? That could possibly hit its earnings, and in the same way, if you're a dividend investor, it will possibly hit the dividends that you're possibly receiving on a regular basis. Number 2, market bubbles. Certain market conditions can lead to asset price inflation and eventually market crashes, which can negatively impact finances, especially if you're investing in high-risk portfolios and you're in the back half already of your life, or if you're old already. That's why it's so important that the older you are, the more you should be putting your funds into assets that are not as risky anymore, so that should there be crashes or market bubbles, when you are older, you're not as affected. That's why I keep hammering it. It's nice to have stocks and crypto, but it's nice to balance that off also with bonds, cash, savings accounts, real estate, and also preferred shares and dividend paying stocks that are relatively predictable. Number 3 is this: why long-term investing may not work for some? Because there are company-specific risks. Companies may face challenges that impact their financial performance on the stock price, such as changes in management, increased competition, or regulatory issues. Or think about it this way: what if the CEO of an amazing company you invested in right now, they're not the CEO of that company 10 years from now, and the company is not as good, or probably a new competition would arise? Let me give you an example on cell phone. When I was younger, Nokia was the top cell phone brand. Everyone used Nokia 5110s, 3210s. Everyone played Snake. Comment below if you were in that era like me. Then suddenly BlackBerry took the helm. Then all of a sudden, Apple with its iPhone, boom, ushered in a new era of how we live our lives today. Nokia, BlackBerry are not as relevant as what they were before. And that's why also there should be an active level of investing, even if you're a long-term investor. That's why a big preference on fundamental analysis is so important, because when the reason why you bought that company is no longer there, even if you're a long-term investor, you must get out as well. And I think, just to make this super clear, if you're a long-term investor but you don't study fundamentals, you might get hit and you won't be able to react when times like this happen, that it would affect the company that you're investing on. Number 4 is this: political instability. Political instability and changes in the government policies can impact the economy, financial markets, leading to market volatility. Again, if you're in the long term, who is in charge for a certain era may be favorable for this company, but 10 years after, 20 years after, that might not be the case. Or one regime is into oil and then they get replaced, but the one who replaces them is into renewable energy. Or like, for example, one is into building of roads which will benefit cars, versus one that changes them, that would be pro trains and subways, that will heavily affect people buying cars, because people would shift into subways and MRTs. So there could be changes in governments that could affect your stock investments and could affect your returns as a long-term investor. And lastly, unforeseen events. Unforeseen events such as natural disasters, pandemics, or large cyber attacks can have a significant impact on the economy and the financial markets. That's what we've seen in 2020. There was a pandemic that caused the markets to drop massively. But then again, that should be, at least in my opinion, I'm a big fan of long-term investing, because drops like that would have been an opportunity for people to stack. It may sound negative for people who don't like investing for the long term, but for people who have a grand view of how things work, investing for the long term and crashes actually favor long-term investors. Those are the 5 reasons on why long-term investing works, and those are the 5 things on why long-term investing does not work. As for me, I love long-term investing. I know that it works. I've seen how it works, and I hope that you guys learned something from this video that would help you also as an investor. If you guys have any questions, put them down below and I'll try my best to answer them. If you want to know more about the stock market, I have books written that you could check out in the description. I have a webinar that you could also check out in the description. I have thousands of videos here in YouTube aimed to help you, to educate you, to be a better investor as well. If you get value from everything that I'm doing right here, I highly appreciate it if you could press the like button, put a comment down below, click subscribe, and share this to people that you believe will benefit from this. So that's it for now. Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.